the most meaningless thing in the world. It's drawing you a vision after 45. Because then, you don't even have a chance to regret it. 97% of the world believes that. The best financial management method is to take advantage of compound interest. Because there's a man named Albert Einstein used to say that compounding interest is the eighth wonder of the world. The legendary investor Warren Buffett also said that you get rich slowly. These two statements were made by people with their own intentions. Take advantage and spread endlessly. That's 97% of people. Believing in a wrong financial mindset, use compound interest to exchange the present for the future. Financial business people hear it all the time. Hear this again? So much so that they believe it's true. And then they'll tell you, let's start saving now. The amount of interest per day will be added to the principal. It's growing every month, more every year. That's what interest is. By the age of 60, you'll have millions of dollars in your hands. And could become a rich old man. Like Warren Buffett. I just want to talk about the end result. I couldn't drive until I was 60. What's interesting about the poster? I agree with the point. Use the present in exchange for the future. But if that's use the money of the present in exchange for the money of the future, I don't play. Long-term vision is important. But that's why I choose to use my current money in exchange for current money. If there is no money in the present, how to make money in the future? I've seen a pretty interesting story recently. Someone advised a friend to quit smoking. Said that if he didn't smoke a pack of cigarettes every day, the amount saved after 25 will be enough to buy a poster thanks to compound interest. But the friend just asked back, "Do you smoke?" Kia is proud to answer, "I've never smoked a cigarette." That's my friend laughing. Where's your potsu? You see, this is the problem. And if you're still watching this, I'll tell you how I understood compound interest to make real money. If you don't want to miss out on valuable information, subscribe to the channel and turn on the notification. Let's take a look at our idols first. Does Warren Buffett really get rich on compounding? The truth is that at 32 years old, he's got over $1 million from investments. That's over $1 million from 15 years ago. Do you have a salaried job and use compound interest to get rich? The average income of a person? It's about $3,000 a year. So how can you multiply that money? The reason is simple. He didn't learn compound interest, he learned how to raise capital. At age 26, Buffett raised $100,000 from relatives and friends to invest in. 6 years later, he multiplied that by 10 times. There's two important points here. The first is perfect's investment rate of return. It's really terrible. Second, you always advise others. Don't borrow money to invest. But in fact, he used other people's money to invest. From the beginning, he always used the financial 7. It's just that your risk is extremely low. Even almost zero or negative. In other words, you use other people's money to invest, and those same people have to pay you. Buffett's hedge fund company, profit or loss. You still have to pay the management fee first. If the investment is profitable, you get a percentage of the profits. He also owns many insurance companies, where money can be raised, even cheaper than free money. 2000 to his company. Issue of floating security. First in history. In other words, what you're really playing with is not compound interest. It's a financial 7. Everyone knows that Jeff Bezos got rich thanks to Amazon. Mark Zuckerberg got rich thanks to Facebook. And billionaires around the world, everyone gets rich through business. But it's only Warren Buffett. It's said to get rich by investing. Many people think that buying stocks, it's going to be like Buffett. See yourself as superior to others. Especially compared to those who don't know how to invest in stocks, I can only laugh. Because retail investors buy stocks, simply just buying stocks. When Buffett buys stocks, it's called business acquisition. He gained control of the entire company. Take, for example, the insurance company Berkshire Hathaway. It started out as a fortune-killing company. When Buffett bought it back, he decided to invest for a while and then quit. I can't believe this company is losing money. That made him unwittingly the largest shareholder. The problem is that Buffett doesn't know how to weave, so he used this company to acquire another insurance company, then redirect Berkshire Hathaway, become an insurance group. Under his management and restructuring, Hathaway Berkshire stock value has increased many times, help it become one of the greatest financial groups world. Bluff holding a large stake in this company. So how can he not be rich? Look at how he operates capital. He is clearly a businessman playing with capital, more than just an investor. And most importantly, all of his investment activities are all based on an unshaken foundation. That is the principle. When you have a solid foundation, like bullshit, have a business that generates steady cash flow and passive income, then investment is really effective. First, your capital is now large enough. If I invest a few $1,000,000, then my profit margin doesn't need to be too high. Time does not need to be too long. But I still make a lot of money. Meanwhile, if you are a salaried employee, set aside a portion of your money even if you have a high rate of return. Better return in investment time than me. Then you may not earn it in your whole life. Equal to my annual income. Monday, I can invest in areas that you can't. You can only buy stocks or mutual funds. But I can buy real estate. Or even acquire small companies. Third and most important, we invest without pressure. If loss, our business is still generating cash flow. And you, if investment loss, when only income comes from work, you can lose everything. Many people commit suicide for this reason. Capital markets operate according to a cruel law. Poor people can join the rich five. But it is very difficult for a rich person to become poor. I have researched this issue very deeply. Many people say that before the age of 60, bragging doesn't make much money. That 99% of his wealth was created after the age of 60. But this is a misunderstanding. In fact, at the age of 52, Buffett had $370 million. He was rich early. Then just use compound interest to amplify their assets. If you understand compound interest, you will see that it has three core elements. First, the principle is the amount of money you invest. Second, profit margin can be understood as the profitability of an investment. The third factor is time. Which of these three factors is the most important? Still the original capital, because of interest and time. Just a tool to multiply the initial capital, then just reinvest again. However, the risks in this process are extremely large. First, every time you invest, you put both capital and interest into it. Don't know your math teacher ever taught you a simple rule? If you make 100% profit this year, but just next year lost 50%, the amount returned to $10,000. In other words, if you lose 50% today, tomorrow you have to earn back 100% to get your capital back. An investment that doubles in this day and age. Hard to find while a stock loses 50% of its value. Then, it is very easy to find. This is the reality. Most stocks are all affected by the general market. Many people say that Tesla stock, Elon Musk is busy with Twitter. But that's just an excuse. Look at Tesla's stock price chart. Then compare with market index. Do you see how similar they are? Then look at the stock prices of Facebook and Amazon. They also fell sharply according to the general market. These top stocks are all down. According to the general trend of the market, when you buy mutual funds, look at their portfolio. Most of them hold these big stocks. And every once in a while, the market has had another strong correction. If you just wait for the price to go up to buy, so how do you invest? Buffett is good because he has a huge amount of capital to invest. Not only achieve 22% profit per year, he can continue to reinvest next year. I have higher profit from speculation than you and make money faster, but that's because I only dare to use a small part of the capital and leverage 7 to trade. My way of playing is completely different from his. I earn money and withdraw it immediately. But he maintained the strategy of earning less, but stable in the long term. Besides real estate investment, most of my assets are for investment. Because follow me. Real estate not only increases in value, but also brings in cash flow, money from rent, and in the long term, its returns are higher than most other investment channels. This is the only area where I can apply compound interest. If you understand what I am saying, you will see that I am investing more steadily, compared to just taking the principal and profit to continue investing. In stock investment, we're just calculating the line value. It means, let's say you learn English vocabulary today. Learn 10 words a day. According to the theory of financial experts, after 3 days you will remember 30 words, not forgetting a word. But that's impossible. In fact, by the 4th day of the 30 words you've learned, maybe you've forgotten a third. Like that, the actual number of words you can remember is only about 20. And this number is the line value that you can maintain. The more you learn, the more you forget. The stock market is full of experts. Why do most people lose money? What about the real estate market? There are no experts. In fact, the government is the biggest expert. Even the top traders on Wall Street. It cannot be guaranteed either. Annual profits are always growing. They will definitely lose some time. And when you lose, the losses will add up. According to the law of compound interest, if you're always reinvesting both capital and interest, just a little hole, you can lose a lot of money. Buffett has more money than you. He has a higher annual rate of return than you. During his 15 investments, it is impossible for any serious loss to occur. Just one big hole. Most of the previously accumulated profits will be swept away. So the first thing about playing compound interest, remember the lies? Number 1, never lose. Number 2, never forget rule number 1. In fact, Buffett lost $10 billion in 2020. When buying airline stocks during a pandemic, he can take a loss, but you can't. You can afford to invest in both capital and interest. Number, do you own any assets that generate cash flow to cover losses? Number, so says compound interest is stronger than the atomic bomb. Very simple. Your math teacher used to teach compound interest formulas. Right? Let's say you invest $100,000 in a stock. The first year, 10%, that's $10,000. If you're making $10,000 a year and only invest $100,000 a year, then in 7 years you've earned $70,000. But if you understand compounding and reinvesting both capital and interest, it will be different. The first year you invest $100,000. 10% interest is $110,000. Next year you invest the full $110,000 and keep 10% interest. You have $121,000. Another year later, you're going to invest the whole thing and keep multiplying. And so on to the 7th year. Your money has almost doubled. Sheer end, initially. Now you've got almost $200,000. That's, you break even with a significant profit. That's why the math teacher has engraved a truth in your head. If you use simple interest, you get $70,000. If you use compounding, you get $100,000. And they'll tell you, the longer the compounding, the bigger the profit. If you invest $40,000 today and apply compound interest after 45, that amount can go up to $450,000. More important, if you take $10,000 a year from your salary to continue investing at compound interest, your profits are worse than the atomic bomb. Stable profits are not always easy to achieve. Second, as Perfect says, it takes time, and most importantly, you have to learn how to protect your health and extend the life before. There's no time to talk about compound interest. If Buffett dies before the age of 60, he's not going to get 99% of his wealth. And if so, everyone in the world will know about him. If you're a salaried worker, as I turn 30, if you are a loyal employee, it is very difficult for you to advance further for all that you accumulated before. By the age of 30, it will stop. Unless you're a natural-born genius, or have special luck. Otherwise, your path to advancement will be limited. This is the general condition. Usually at this age, your position in the company is almost fixed. The manager is still the manager. The manager is still the manager. The higher the position, the less. When your position is limited, your salary is almost fixed. You can make the wrong argument. The company increases its salary every year. Wages on paper increased the previous day. Hiring a college student can only cost $1,000. Now you can pay $2,000. But what's the reason? Is it because today's students are better? Is it because the quality of labor has changed? It's not that wages are rising because of inflation. Nominally, your income is higher. But the real value of that money is the same. You can verify this by going to the market. Ask the price. Many countries also use this method to adjust the minimum wage to please the majority. They told you, we gave you a raise. But what they're not saying is that prices have also gone up. On the surface, you feel like you are benefiting, but in reality, you get nothing. So, I want to be straight with you guys. When you are young, not much capital, and you can't control interest rates either, then don't dream about compound interest. It doesn't matter to you. I always advise people, when young, focus on finding ways to increase your income, but most people just worry about saving every penny. It's a way to comfort yourself. They think just save. They will have a stable and happy future. But as a result, they become 97% of people will suffer inflation and recession. Wiped out savings within 15 days. Bullshit can play compound interest because he used other people's money to create leverage. I invest in real estate also follow this path. But we do not accept this type of investment. Spend $10,000 a year. Wait until 65 to get $1 million. Our goal is to use initial capital as a foundation to expand assets. Not the type of small bet, big win. Can you spot the difference? Here are my honest words. Those who have been through it will understand. Assets. Not the type of small bet, big win. Can you spot the difference? Here are my honest words. Those who have been through it will understand. When you have nothing in your hands, no capital, instead of wasting time trying to find ways to play small to win big, why not focus on investing in yourself? Because you are the only asset you can control, and you are the most valuable investment. Do you know a real talent? How much is it worth? Are excellent talents hard to find? Must fight for. I asked a brother who works in banking. Investment, he said. When they invest in top 5 startup teams, they must proactively go to the place to ask for capital investment opportunities. The founders, without even looking for investors, because investment funds always lack good projects. Is lack of people capable of making the project a success? So talent is the most important factor. When young, if a nice outfit can help you increase your chances of getting a job, buy it now without hesitation. If a party or a meal can help you get promoted, you must join. I hate hearing people talk about saving the most or cut spending. People only care about saving when they fear they won't earn more. That's why I want to show you a way. When the whole world is doing the same, you have to find another way. Take the amount you intend. Invest in financial products every year and use it as startup capital. Combine with yourself to do small projects that large corporations ignore. You can pay a deposit to buy a Mercedes, not to brag, but to become a driver for senior management only of foreign companies or wealthy businessmen, because you bring your own car. So your salary will not be just driving wages. You can include car rental, gas money, parking fee, and other expenses into your service package. You just tell the customer, every month he pays me a fixed amount. I will take care of everything. Deduct from your own salary. After just a few years, you can recover the cost of buying a car. I'm not just talking. Outside of main job, he also uses the car to earn extra income. In spare time? As a result, after a few years, he made a 100% profit. Then he hired more drivers, expand investment, buy more cars, and soon became a small boss. By this time, he had capital in hand. Of course, this is just an idea. There are many details to consider. You don't have to do it exactly like that. Because many people say it straight. They would rather die than be a driver. Moreover, this profession has limited income, though I don't do it that way. But if I can do it, then it was great. Follow me in the first 20 or even 35 years of life. Interest rate and time do not matter. By how much capital you have? In 25 investments, interest income and the compounding effect of time are all insignificant. It is important that your capital size is large enough. If you don't have much capital, it will take you a lot of time to generate significant profits. When you are young, don't worry too much about financial investment, because the most important thing is yourself. Only when you enhance your own value, you will not lack money in the future. This is what you need to focus on right now. Make a clear distinction between important things and urgent matters. That's how you should act. However, I am not saying that compound interest is not important. It really matters, because if you maintain profits, the compound interest effect will get stronger over time.